Welcome to the Central Banking Revision class number 3. You watched the earlier two, 1, 2 and this is 3. And tomorrow there is a marathon. Don't miss any of these. Okay, marathon, revision classes. Okay, don't miss this because all the questions are recollected from the earlier exams. Watch the video, like the video, share it with your friends. Subscribe to the channel. Don't miss to subscribe the channel. Okay. And again I'm telling you, watch complete marathons. Watch all the marathon and all the revision classes. You'll find it very useful. Okay. So let's start. Conflict arises between central bank and the government. When does the conflict arise? A. Voters elect a government to create more jobs, but the central bank can keep interest rates high to stifle investment and consequently job creation. Means voters have elected government why? So that keep the interest rates, this more jobs. More jobs means what? The interest rate should be lesser. Here, kindly note, whenever your repo rate, interest rates are less, then only there will be more growth. If the interest rates are high, there won't be that much growth. Okay. So voters elect for more jobs, but central bank's objective is different. RBI's objective is it has to keep the interest rates high. If they keep it high, only then others will invest. It's like the FD. If your bank keeps the FD rate high, then only others will come and invest in your bank. Same thing about FIIs. FIIs will come to your country if you have higher interest rates. So both are opposite of each other. Government's role and RBI's role. Right? We have to maintain the balance. That's why we have that ISLM curve. RBI wants certain officer to stay, but the government wants the officer to be removed. Both A and B. None of the above. Which of them is true? Both A and B? I am seeing many answers as both A and B. Sir, kindly note, just now, means the point over here is, government will never interfere in RBI. Never interfere in RBI. Internal functioning. So, this situation will never happen. RBI wants some officer to stay, but the government wants it. Government never interferes in this. So, this is out. Okay. So, this question is out at all. Got it? So, this is out. This is in. Voters elect government to select more jobs, but the central bank can keep interest rates high to stifle investments and consequently job creation. Okay, so this is the real answer. Both A and B is not always the answer, kindly note. We are in the habit of both A and B, not always. Got it? Credibility of central bank becomes more important in terms of high uncertainty, because whenever there is huge uncertainty, what is uncertainty right now? What is the present situation means? In many situations during the COVID or during any war situation, the credibility of RBI is at stake. So, credibility of central bank becomes more important in times of high uncertainty because A, it becomes more about specific policies and less about confidence in policymakers' ability to maintain and manage uncertainty. More about specific policies and less about confidence. It becomes less about specific policies and more about confidence. Okay, more about confidence. It becomes more about specific policies and more about confidence. It becomes less about specific policies and less about confidence. See, everything is whole game is more and less, more and less. Think now. It's a juggling game. So what is the answer for this? It's a juggling game. The answer is, it becomes less about specific policies and more about confidence. So answer is this, B. Okay, it becomes less about specific policies and more about confidence in the policymaker's ability to manage uncertainty, isn't it? People must have confidence. FIIs must have confidence. Your own people must have confidence in the banking system. Only then things will work, isn't it? What are the 5 pillars of central bank to ensure transparency? This question is very important. 5 pillars, many times asked in the question in the exam. Governance, policies, operations, outcomes, and official relations. Governance, government sanctions, operations, outcomes, and official relations. Governance, policies, operations, president's nod, and official relations. Governance, policies, operations, outcomes, and RBI governor's signature. Think everyone. Is it related to some president's nod or is it related to RBI governor's signature? It has nothing to do with it, isn't it? So this is out. This is out. Only 2 are remaining. Governance, policies, operations, outcomes, and official relations. Here, government sanctions. What is this government sanctions? Government is a different body and RBI is a different body. It has nothing to do with these two, are not related to each other. Answer is A. Governance, policies, operations, outcomes, and official relations. That is the main point. Okay? State true or false with respect to the accountability of the central bank. So state true or false. Okay? It is 1 and 2. 2 questions are there. 1 and 2. Accountability with respect to monetary policy is measured by price stability. With respect to monetary policy is measured by price stability. Is it so? We have this credit and monetary policy always. Every 2 months we have this. So what does that policy give? Credit and monetary policy. It always focuses on price stability, inflation. Okay, so the answer is true. Inflation. Price stability means inflation. So this is true. What about the second one? Accountability with respect to financial functions and objectives is measured by the ability of the banks and FI's supervision. Financial functions, okay, with respect to financial functions is measured by the ability of the banks and FI's supervision, the supervision of RBI. So RBI's financial functions are dependent on the supervision. Financial functions and objectives. It is measured by the ability of the banks and FI's supervision. Means how does it supervise? How strongly it supervises? True. That is also true. Because if RBI has to perform certain financial function or task, many of us thought this is false, but this is true. If RBI has to perform certain tasks, it has to see to it that the credit and the money is passed on through the banks to the customers. So supervision is very much important. Okay? The first presidency bank to be set up was Bank of Bengal, Bank of Bombay, the Presidency Bank of Madras. All were established at the same time. This is quite a difficult one. This is quite a difficult one. Think over it. Which is the answer? Difficult one. This is really difficult. The answer is Bank of Bengal. Okay, Bank of Bengal. Kindly note. This was the first presidency bank. Here, remember, there were 3 presidency banks. Bank of Bengal, Bombay and Madras. All 3 presidency banks were then combined to form. These 3 were combined to form Imperial Bank. Imperial. Okay. Then Imperial Bank was later, after we got the independence in 1955, it was transformed to SBI. Okay. So the history goes back. Got it? Clear? Next. A major consideration given by British government in deciding on exchange rate arrangement related to facilitating remittance towards home charges. Here home charges means what? Now what is this concept of home charges in British government? Now why should we study British government? We need to study our system. Here, it's not that. We have to study all the central. Your subject is central banking. So central banking means not only our country, majorly our country, but other countries also we have to study. Right? So what is this home charges? A is payment in sterling for meeting the home expenses of the soldiers of the First World War. Second, payment in sterling for meeting the various obligations for covering the India expenses. C, payment in sterling for meeting the various obligations such as interest on debt, pensions, payments of war office, cost of government stores, etc. and all of the above. This was way back in World War situation. These home charges were introduced. Okay? What were these home charges? What were these home charges? These home charges means here, understand, this was a method of looting our country. Actually, it was a method of looting our country. How did British loot our country? Home charges. Payment in sterling for meeting the various obligations such as interest on debt, pensions, payment of war offices, cost of government stores. This is the right answer. But how does it relate to, see, this is out of the topic, but I'll take 1 minute. How does it relate to looting our country? See, these home charges were the payments of all these. But from where did this payment, this money come? This money came from trade. Where was the trade? They manufactured the goods in our country, means took the raw material from us, all that cotton, remember this? Cotton, all this rare earth materials, all they took from here, manufactured there, and then did the trade. And there the money had come. Means basically what had happened? They looted our basic raw materials. It was to the tune of 45 trillion, it seems. 45 trillion. That's why. Okay. So the answer is this. Payment in sterling for meeting the various obligations such as interest on debt, pensions, payment of war office, cost of government stores, etc. The RBI was inaugurated on April 1, 1935 as shareholders institutions, government institution, charity institution, trust institution. What is it? RBI was earlier what? RBI, when it was formed, was it a government body? Or was it a charity? Was it a trust? Of course, charity and trust are out. So these two are out. Only these two remain. So shareholders institution or a government institution. So it is shareholders. RBI was inaugurated as a shareholders institution. Got it? Rupee was linked to British pound sterling until the year. Very important. And you will be amazed. You will be surprised to know the answer. Rupee was linked to British pound until the year 1947, 50, 75, 91. You will be surprised, really surprised. Many of us are thinking that 1947 we got the freedom, so rupee should be separated. But no, rupee was linked with pound till 1975. Till 1975 it was linked to pound. There was no relationship between the two, right? We had got the independence, so by 1950 it should have been removed. Let it be. Okay? Rupee value was determined with reference to a basket of currencies until, again, basket of currencies. until it was 1991. Kindly note 1991. Okay, basket of currencies. What is basket of currencies? Various currencies of the world. It was linked to various currencies. Pound, dollar, everything. Plus 3-4 more. Okay. Match the following with respect to the BR Act. BR means Banking Regulation Act 1949. Huh? BR Act means Banking Regulation Act 1949. Okay, this is BR Act. So kindly match. Part 1 relates to short title extent, form of business, suspension and winding up of banks, penalties, fines and cooperative banks. So A relates to what? 1, 2, 3, 4. Now we'll just match this directly over here. What is the answer? All of you, think. Part 1 relates to, what does part 1 of BR Act give? Basic logic is this. What does BR Act is having 5 parts. Banking Regulation Act is having 5 parts. So what are these 5 parts? That is a basic question. So part 1 relates to what? Now all of you will think, 1 will not be related to 1. It will be definitely something else. So you will answer anything except 1. But the answer is 1. Part 1 relates to short title extent. Means it gives the definitions. Titles, definitions, everything. Part 2 relates to forms of business, suspension and winding up of banks, penalties, fines, cooperative banks. So again you will think, part 2, 1 was okay, 1 was 1. 2 will be what? 2 will not be 2. So you will answer anything except 1 and 2. But the answer is 2. Part 2 is 2. Part 3, suspension and winding up of banks. Means part 3 relates to suspension of and winding up of banks. Again the same logic. 3 will not be 3, either 4 or 5. And the surprising element in this question is all are directly related. Part 4 is 4, penalties, fines, etc. And part 5 is 5, cooperative banks. All are directly related, 1 to 1. 1 is related with 1, A is related with 1, B 2, C 3, D 4, E 5. Okay? So all are, kindly note this. Part 1 will give short title extent means definitions. Part 2 will give forms of business. Part 3 will give winding up. Part 4 will give penalties. And part 5 will deal in cooperative banks. This question will be there in exam. Either anyone, here, they won't give you match the following. They may or they may not. They'll directly give which part of BR Act deals with cooperative banks. Part 5. Okay? LERMS, LERMS, involving a dual exchange rate mechanism was instituted in March 1992. Means what? What is LERMS? What is LERMS? Is it local exchange rate management system? Is it little exchange rate management system? Is it liberalized exchange rate management system? Is it loosened exchange rate management system? Two answers are obviously out. See, this little and loosened, these are out, isn't it? So this is out and this is out. Only 1 and 2. Local exchange rate or liberalized exchange rate. Think over it now. Is it local or liberalized? Think over it. Local or liberalized? So it is liberalized. Okay, liberalized exchange rate mechanism. Got it? One nation, one ombudsman combines which of the following ombudsman schemes already existing? So one nation, one ombudsman. This was brought in 2021. Okay, 2021. Now it combines which three schemes? The Banking Ombudsman Scheme 2006, Ombudsman Scheme for NBFC 2018, the Ombudsman Scheme for Digital Transactions 2019, and all of the above. Think. Now this you should be able to answer. This was there in your JAIIB also. This was there in your JAIIB also. So you should be able to answer this. Yes, the answer is all of the above. All of the above. All the three schemes were combined. Banking Ombudsman 2006, NBFCs 2018 and Digital 2019. Okay, they were combined now. All the three were combined to form this integrated. One nation, one ombudsman, or we call it integrated. The Royal Commission of Indian Finance and Currency, known as DASH, 1913, proposed the amalgamation of three presidency banks. Which were the three presidency banks? That Bank of Bengal, Madras, Bombay, these three presidency banks. So in 1913, they were amalgamated and formed Imperial Bank. So this Imperial Bank, what was that commission known as? Chamberlain Commission A, Fowler Commission B, RBI Act, and none of the above. So the name is, it's obviously difficult. Many of you might not be knowing. Those who have read it, it's okay. Otherwise, answer is Chamberlain. Okay? Chamberlain Commission. This commission gave the idea that merge all the three banks and form one imperial bank. Okay? Got it? Now kindly note, one important point you all must note, that when these banks were existing, when was it? 1913. So do you mean to say that other banks were not existing? They were existing. Central Bank, it was existing since long. So even Indian businessmen had their banks at that time. Okay? So kindly note, it wasn't that only these Britishers had their banks. Indian businessmen also had their bank. They financed Indian companies at that time. Central Bank was one of them. The Imperial Bank of India was formed in 1921 with the amalgamation of which banks? Simple. Three banks. Just now you saw that question. Bank of Bengal, Bank of Bombay, Bank of Madras. All of the above. Answer is this. All of the above. Okay? Answer is all of the above. The Royal Commission of on Indian Currency and Finance, popularly known as what? Now this Royal Commission, what is the use of this Royal Commission? This Royal Commission gave actually the idea of RBI. Okay? This Royal Commission actually gave the idea of RBI. Means RBI was formed because of this commission. What is that commission known as but? What is the name? Let me see in the comment section. Hilton Young. Okay, Hilton Young Commission. That is the name of that commission. At establishment, RBI was specifically entrusted with an important promotional role to finance. So it was entrusted with an important promotional role to finance. So what finance? What did they want to finance? Industrial Revolution, agriculture operations and marketing of crops, both A and B, and none of the above. Surprising answer. Surprising answer. Surprising answer. Many of us think industrial revolution. Or some of us think, oh, both will be there. Agri also, industry also. So both A and B. Answer is not that. Answer is B. Agricultural operations and marketing of crops. This was the main goal of RBI when it was formed. Okay, when RBI was formed, it was formed for this agri operations. Okay, that was the main goal at that time. Okay. The RBI was nationalized on dash in terms of Reserve Bank of India Transfer of Public Ownership Act 1948. So when was RBI nationalized? Of course, not before 1948, isn't it? So the answer is 1949. Okay, then only that BR Act came in, isn't it? So RBI was nationalized on January 1, 1949. Got it? The core functions of RBI as laid down in the statutes are. So what are the main functions of RBI? What are the core functions? What does RBI do? What does RBI do? Why should RBI exist? Issue of currency, being banker to the government, including the functioning of debt management, banker to the commercial banks, and all of the above. In fact, there are more functions. RBI acts for issuing the currency because monetary is in the hands of RBI, except that coins and 1 rupee note. It is a banker to the government. So government has an account with RBI. Whenever it wants any loan, it will go to RBI only. Banker to the commercial banks. Okay, so this is called as banker of banks. All of the above. Okay. There are other functions also. Those are not given over here. Banker of last resort. Isn't it? That is also one function. Supervisory function. Those are not mentioned, but those are there for RBI. Okay. It was only in late dash that the rupee was delinked from pound sterling and its value was determined with reference to basket of currencies until 1991. When was rupee delinked? We saw one question that rupee was linked to pound till 1975. So obviously in 1975 it might have delinked, isn't it? Think of the answer. Think of the answer. Isn't it? So 1975. Up to 1975, it was linked to pound. From 1975 to 1991, it was linked to basket of currencies. Basket. Okay? And in 1991, it again changed. Got it? The RBI's responsibility as a banker's bank was essentially twofold. So what is the role of RBI as a banker's bank? Banker's bank means any bank faces some problem, it will go to RBI for money. So what is the twofold? First, it acted as a source of reserves to banking system and served as a lender of last resort in emergency. Second, and more important responsibility was to ensure that the banks were established and run on sound lines with the emphasis on protection of depositors' interest. Next, this is A. So A is obviously true. Don't even read B and C and D. Okay. This is banker to government. So this is banker to government is a different function. Banker to government is not related to banker's bank. So answer is A, isn't it? Answer is obviously A, isn't it? Next. In the initial years, banks were governed by, so banks were governed by which act? Indian Companies Act 1913, Banking Companies Inspection Ordinance 1946, the Banking Companies Restriction of Branches Act 1946, and all of the above. Very typical answer. Very typical answer. So in the initial years, the banks were governed by all of the above. Okay, it is all of the above. Banks were governed by all of the above. Got it? All of the above is the answer. A special legislation called Dash was passed in March 1949, which was renamed as BR Act in 1966. So what was that act called as, or this resolution called as, legislation called as? Banking Companies Act, RBI Act, Companies Act, the Banking Administration Act. Yeah. So what was it called as? BR Act. Here, 1949 BR Act was formed, but it was not actually named as BR Act at that time. It was named as Banking Companies Act at that time. When it was formed, it was as a Banking Companies Act. Then in 1966, it became BR Act. BR in 1966. And this was in 1949. Okay? Got this point?